Let's talk Tesla and BYD. So I'm going to be publishing a show tomorrow morning, and it's with Hans, and we broke this down, but I'd love to get your opinion on this. So first of all, Tesla released the new revised Model Y 10 days ago, and it's reported at this point that they've sold 100,000 vehicles in just 10 days, and that's you can see that from the registration numbers. So not validated, not confirmed, but it's seems to be that that's what happened. Tesla Model Y is just rocketed, incredible. Not only is it already the number one best-selling vehicle in China, not just EVs, across all cars, this new Model Y is something that everybody wants, and it's off to a good start. Now, everybody keeps saying BYD is a Tesla killer. BYD, can't you believe that they're outselling Tesla? Well, for 2024, BYD sold 1.76 million battery electric vehicles, not including the hybrids, just battery electric vehicles. Tesla sold 1.79, so just a shine, a little bit better. So let's say that they're both equal in sales. But, however, there's now report, right, from a independent party report that says that BYD could be, heading into trouble. Their actual debt is 12 times more than they've stated on their balance sheet. This debt that they have, $44 billion is what the estimate is hidden in the supply chain because they're financing these supply chains. They're playing a little bit of this, hide and seek a little bit, and they don't talk about the other liabilities that they don't explain what exactly is in there. And we've already reported that their payment to suppliers, payment cycles, is 275 days. They take 275 days to pay suppliers. Grace Tao of Tesla came out and said, we pay our suppliers within 90 days. So BYD is doing this, and then even their own suppliers are also kind of like delaying how they pay everyone else. And so this is just a potential house of cards. Jeff, what's your reaction to that news?
Yeah, and so I, I want to be clear. This isn't a private space. So I have done. I've worked with BYD. They've been a supplier of mine before. So I'm not going to say anything that's like, that shouldn't. It's not public information. But in general, and I've run, a supply chain for American companies. I've also run supply chain and been executive of supply chain for Lenovo, a Chinese-based company. So what was great about that is I got the experience and understanding of how supply chain is run. When you have an end-to-end China company and China team. In the case of Lenovo mobile phone, that was an end-to-end. There was never a U.S. asset until they acquired Motorola. In the case of Lenovo and IBM, they acquired IBM and they acquired all those procurement assets. Why am I telling you this? I'm telling you this because I've had the experience of actually working in supply chain and in the leadership role in China as well. So I've seen both the U.S. side of it, global side of it, and then also inside of domestic China. And so in terms of what's happening here, it looks like they are floating working capital out to suppliers and to get jobs done, to get product made. And the accounting, I don't know how. I mean, this stuff is not allowed to be done at wide scale. What happens in the U.S. is if you want to be on board with like a major U.S. OEM, like an Apple or like a big company like Motorola or whomever, you have to go through and do financial disclosures, and you've got to understand like where's your working capital at and what's the risk in the business. And just the way that these things are run out here, I just tell you, like, I don't know. I mean, I don't know how we talk about things about Tesla like down to like the hour of like where their inventory is, and even some of the other US car makers too. Does anybody know what the real inventory is of BYD or Li Auto or you name the company? Do we actually know what they're like? What do they have at dealers? What do they have in the fact? I mean, some of this stuff is not readily known. Some people are like, well, did you ask the right people? Well, you know what? You're getting a lot of different answers. So in general, what's happening here, though, is there's been a separate accounting firm. There's also been publications like Bloomberg and Reuters. They've written about this. I wrote about this last year when I saw that it's not only that their payment terms are expanded, but they're expanding. You have to
Mhm.
look at it over a multi-quarter and a multi-year cycle. and they're expanding, like they're getting progressively worse now. So we don't have the 2024 final numbers yet. I think those will come out here pretty quickly. But if the 270 hasn't 270 days, that's
275.
yeah,
Yeah,
that
that was 2023. So if that takes longer in 2024, uh-oh, that's close to a
so
year.
what we
Yeah.
know is that from 2021, the pandemic really crushed a lot of people. And it looks like they started extended financing. It looks like, and this is what happens in China. The China government is also extends financing to suppliers. That's why you never really know the real financials of some of these things. And they prop up some companies, and some companies they just allow to fail, and that's why you don't really know what's going on. But what you do know is when you have 3 successive years in a row where your payment terms are expanding, that is a sign of financial stress. That's one of the, like, the typical things that a finance team does. They look for, when they look for in the disclosures, they look at what's going on with payment terms. So that's what's happening. It's happening with multiple China OEMs. Tesla in China has actually been taking their number down. They've been down, 120. They got down to 110 to 100. Now they're around 90. And so they're getting healthier. Now there is a difference between the US and China. Most of the US OEMs at around 55 to 70 days. 55 to 75 days or payment terms is pretty typical in the US. GM is doing is some is has some expansion in that. I think they're in the mid to upper 60s, but they're okay. Ford's pretty low, I think in the upper 50s. Tesla, I think, is like right at 60. So there is a difference between the US and China. So I understand that offset. But like what's happening in China is these guys just keep extending out further and further. And I think the root cause of that is, they're expanding their business, and they're also expanding geographically. So the length or span of their supply chain is actually, like, the number of days in their supply chain is actually expanding, where they're actually getting paid from customers. They're putting cars on ships now versus just building them and selling them domestically in China. So their actual span of their supply chain is growing, and they're not able to pay their supply. They have to extend payment terms of suppliers. And what complicates it is they're actually funding their suppliers. And then you saw this famous letter that went out to suppliers
Yep.
asking for, 10% reduction in the current quarter. So I just think all these things together are signs of potential financial stress. Now, this could all be figured out. Like, they could have a white knight come in, could be their own government come in and,
Yep.
and save. We don't know what could
Hmm.
happen. The point is,
Hmm.
is like, I mean, this doesn't look good. Yeah.
Yeah, they're not. Nobody's saying I'm not. I don't think you are that they're going to die or anything like that. But this is not looking good. Grace Tao, I think you knew this. I don't. What you just said that made me think you didn't know this. But Grace Tao came out and said that we in Tesla we pay our suppliers in China 90 days within 90
Yeah, I
days.
just said that. They've reduced it
Okay.
to 90 days. They were higher.
Yeah. And then, but let me ask you this because I was thinking this, and is this true? So people go, oh my God, Tesla is in dire straits in China. At any moment, the government can kick them out. Well, if you are the one company that can really pay the supply chain market, all the vendors that are out there supporting the auto industry, and it's the one that's really profitable and it's growing, that's why China needs Tesla there. Do you think that that's the case or not necessarily?
Well, I will tell you, from setting up factories in China and doing business in China, Tesla has a relationship with the Chinese government that I've never seen before. They have, and I've been a part of efforts with significant leverage, but uh, so I mean, I have reporting that people have told me that literally, like, as Tesla was, if you remember the reporting about the India factory, there's pretty credible reporting out there that very high ups in the China government literally intervened and not like told Elon, "Hey, cancel your trip," but like, we're going to put a deal on the table that you can't
Hmm.
resist. And as long as, if you don't go out to India, like, we're going to show you a deal that you can't resist, and here's some detail. So I think Tesla has tremendous leverage in China. I think Elon Musk has tremendous leverage. I have never seen a factory of this size or any size be built without the joint venture. I have built factories out there. We have to have the joint venture, or you have to work through a contract manufacturer. And I've never seen it where it's not done that way. Trust me, we've all asked, we've all tried to, everybody's tried to do their own deal. And in the end, what you end up doing is you end up limiting some of the stuff you do there because you don't want to share it with the joint venture. But Tesla has set up the Shanghai factory without a joint venture. That is very special. I believe they have tremendous leverage against India. I believe that both at a Musk level and a Tesla entity level, that they have tremendous leverage. And you're right, they are a good citizen in terms of employing people, running a safe factory, a relatively safe factory, employing people, paying suppliers. Like
Yep.
they're
They're propping up the suppliers, though, you know what I mean? Like, because their payment terms are getting worse, but here's Tesla paying them, and so you can't slow down Tesla
I
here.
mean, those are the facts. If you want to have somebody like, if there's some bear from the audience that wants to get up and tell me all about manufacturing in China, well, that's great. Get up to the speaker board and tell me about it. But those are the facts of like how things are working. I'd love to tell you. First off, in all honesty, like the China government could do something like
Sure.
completely wild. They could do something wild with China. That's always, or sorry, with Taiwan. That's always the risk. I'm not saying anything zero risk. I'm just telling you that relative to other companies, Western and non-China companies that are building in China, Tesla may have the most amount of leverage, even more than some of the biggest names you could think of in China, because of what they've done with Tesla and what Elon could do with other factories as well. So yeah, they're in a good spot.
Yeah, no, I like your point about India. So what's happened is India has a global intentions to get into the EV market themselves, and so they've been luring Tesla to come build there. And of course, very likely, right? This is rumors, but very likely, China came to said to Tesla, "We don't want you to help them. Let me give you some more incentives. Let me, stay here." That could be what happened. That's why you saw some delays in Giga India.
Yeah, because you have to look at the export business and what China's trying to do with their export business. They're not only trying to export vehicles, they're trying to export parts, and they're trying to export sub-assemblies. Because what may happen in a geopolitical world where like supply chains are very like well they're localized, China, that would hurt China. Like, China has problems here as it relates to supply chain. A lot of people are trying to pull out of China right now. They have serious problems. So one of the things they want to do is they want this auto business. They want it to be vibrant. They are the number one exporter in the world now, and they want to also increase that and open it up to parts and sub assemblies, and which they're doing right now, and they want to just grow all those aspects. So it's a big deal for them. I mean, China went from like they didn't have to own the mobile phone supply chain. They won it. Like they set up everything from people, from tooling, from factories. Like they out and out won that from everybody. And then now electric vehicles came out, and the United States had an opportunity to lead it and own it, and Europe did, and Korea, everybody had these opportunities, and China went out and they won it. Both at a mineral level, a battery level. So they've won station. They've won cell supply. Cell supply used to be Korea, Japan, massive leadership, and China was nowhere. Nobody was putting China batteries in their phones in the early 2000s. Yeah, and now they've turned it around. And now they're the number one manufacturers of batteries. So the next thing is going to be more and more AI data center, and just other applications, silicon photonics. And so you've got to anyway, they're trying to win massive industries. They're thinking ahead. And I would tell you right now that they have significant risk in front of them on the industries that they own today. But they have a firm lead on electric vehicles.
If you're listening in the audience today, please follow Cyberbulls. We've got the two smartest people in the community sharing their information for free. This is Omar. You've got Jeff. Please follow them as well. I'm going to bring it back to the original conversation. Omar, if you're still there, we were talking about the Cybercab. It was spotted with a potential steering wheel. Some people are saying, oh, this is the low-cost vehicle. But one of the arguments people have is they're saying if the low cost vehicle is going to come out, let's say before the first half of this year, so sometime the rumor is that it'll come out in May. If that's the case, why haven't we not spotted some test vehicles by this point? And that's why they're saying, well, the reason is you're actually seeing it. It's the Cybercab with a steering wheel. That's the low cost vehicle. That's why we haven't spotted it yet. Do both of you have a comment about that? Is that there's some truth to that? That if they were going to have a new vehicle, we should have at least spotted something by now?
Well, it's not a cybercab, and it's not only one vehicle. They're actually often using plural vehicles. So the cybercab is the cybercab. These new models they're talking about, we're going to see closer to the summer.
No comment of why we have not seen it. I mean, again, one argument is,
Well,
did
we
we see
haven't
this?
seen it because they don't want you to see it yet.
Yeah. Like, did we see the Cybertruck? You know, like somebody spotted the Cybertruck before they wanted you to see it? No.
Right. It was a complete surprise when they brought it on stage. So, I mean, this is something that's going to be made on the Model 3 and Y line. It is unusual for Tesla. I mean, typically what you see with Tesla is an unveil where they show off the vehicle multiple years before production starts, and people take pre-orders and the pre-orders come in. To say that they have this new vehicle that they plan to start production of this year, but we haven't seen it, there's no pre-orders, it is very unusual for Tesla. So we are in uncharted territory here as far as new product unveils go, and I'm not really sure what to expect. Maybe it means it's something that is more conventional and closer to what we're seeing with the Model Y and 3. Um, I don't really know what to expect at all. This is really uncharted territory, but I think in the coming months things will be a lot more clear about what they mean by those more affordable models, and maybe even on the earnings call coming up later this month, we may get some additional color on that.
Hmm. It's next week, by the way. It's like
Right.
one week,
I mean,
one
there's
week
only
from now.
1 week left in the month, so
Yeah.
Yeah.
You,
Yeah, Jeff.
I was just
Yeah,
gonna
go ahead.
say, I agree on Tesla can't show a vehicle that could be $5,000 to $7,000 cheaper than the 3Y, because that would take 90%, 95% of their production and put a large percentage of that at risk. And so if you think about it, Tesla's buying billions of dollars of components on a rolling calendar every single week, and they're buying them to a production schedule. Like Tesla gives forecasts to suppliers. Even though you didn't order your car yet, Tesla has to forecast. They have to send a forecast to their suppliers. They have to confirm and follow up with those forecasts with orders. And that puts the company's cash literally, at significant risk. Now, the risk is low because Tesla has the number one selling car in the world, and they've got a really good, predictable, order queue. They've got great platform and reuse in their factories. They have low model count, so the risk is actually low. But what would go in and upend that risk and make it very high is for them to show a product that's $5,000 to $7,000. Like, why wouldn't I go order that product, right? And then that puts what they're building and what they're ordering today at risk. So the way I believe this is going to work is there's not going to be an unveil. We will see what these cars look like and how they function and how they differ from the 3 and Y when they are in production on the car already. And I believe that Tesla has been working on ways. I think this is all connected to the tunnels, the expanded facilities and storage space and covered garages, and so they're working on ways to build, to stock, and keep product out of view. They know that we have great people with drones and capability to see this stuff all the time, and I believe they're working on a way to conceal it. So Tesla, this will, like, I agree with Omar, this is going to be unconventional, unlike what Tesla's done before. And they can't show it because of this rolling risk of what they have of what they're building right now. They would Osborne it. And what Osborning means is you take all this inventory, all this uh, you know, liability that you have upstream, and you put it at significant risk, and that would just literally, it would be a huge risk to the financials of the company. So they're not going to do it. They're handling it the right way, and I think it'll be great. And then as soon as they turn these things on, too, I think some people don't miss, if you've never done like economics for manufacturing, like one of the things that's going to happen is when they turn these products on, if it's 2 or 3 different products on the 3 and Y lines, um, they're going to start now diluting the fixed capital absorption amongst a lot more products. And eventually, the goal would obviously be to take the net total volumes up. So what that could do is when these things are up and they're going in full swing, they're going to actually take fixed capital absorption away from the existing 3 and Y. And the 3 and Y costs would actually come down when these things are in production
Yes.
by proxy. And then and that's a flywheel turn. The other thing that these cars will do is they will most likely put a floor on the 3Y MSRPs. The 3Y MSRPs are under all this pressure. Just think about it like a physical house, like just think about moving more and more furniture onto a floor that's got minimal floor loading. If you keep putting all this pressure, eventually you're gonna break through the floor. Well, if there's nothing under that floor to reinforce it, you're going to have significant risk of it falling through. Well, now if you start putting products under the 3 and Y, it props the MSRPs and it stabilizes them for the 3 and Y. So this is a big portfolio move. People just think like Tesla's going to release a car, it's going to be cheaper, and this. What I'm telling you is that there are going to be both positive effects of MSRP, favorable effects of MSRP, and COGS on the 3 and Y by introducing these other cars.
Oh, so good. Okay.
Yeah, I'm really excited about the possibility of a compact. I mean, you look at the Tesla sales in China, which have been really the strongest market. I think it's now their biggest market. And Tesla, I think, is the number 2 volume EV brand in the country, behind only BYD. And BYD's had a lot of success at the lower end of the market that Tesla serves. If you look at the segments where they compete against each other, Tesla actually comes up ahead, even in China. But they also compete in a lot of segments that Tesla doesn't compete in. I think there's huge untapped demand for a smaller entry level car to add to the lineup. I think it'd be huge in Europe. I think it'd be huge in places like Japan and even in the United States, just serving as an entry level product. That lets you, even if you're talking about, for example, the EV tax credit expiring, let's say it expires in 2026, they pass a law to repeal it. You could see the starting price actually still go down if they unveil a car that's 7,500 or more cheaper than the base Model 3. And that, I think, helps offset that a little bit without really raising the starting price to get in. And you look at the impact of tariffs and everything else, a sort of broader policy overlook. Um, these guys are like best friends. They're sleeping in bunk beds together. Elon and Trump. Elon's got an office in the White House. He's got an email address. I think the compact is going to be huge internationally. And here in the US, I think Tesla, it's hard to really look at the situation and think it's going to be a net negative for them overall.
This year, 2025, is incredible. I mean, how many products? It could be the most products ever launched by Tesla ever this year. You got the
Oh, this
Model
is the
Y,
biggest year in Tesla's history, no doubt. I
no
mean,
doubt, right? Like, because
when you
this,
look at what's happening with FSD, when you
yeah,
look at, for example, getting us started with the new Model Y already, a
yes.
major new entry level product, we got the semi starting volume production. We know from the app update they're working on a base model Cybertruck.
Yeah, I was going to
I
ask you
mean,
that if the base model Cybertruck will come this year.
Oh, for sure.
Wow.
It's coming this year. They're working on it. You can see them making changes to the app code. And when you're actually making changes to the mobile app to support that base model Cybertruck,
Coming
that
soon.
makes me
Yep.
think it could be coming, within the next quarter or two. And we've seen that it would be slightly decontented. The tonneau cover would become an optional add-on rather than standard. I think that it looks like some of the power outlets are going to be not included or optional on the base model, kind of pushing people towards the long range trim. So that's kind of disappointing if you did want the standard range, but I do think you do have to kind of remove some content to get people to keep the ASPs at an acceptable level for the product line. But having a Cybertruck at 60K, to whatever extent the EV tax credit survives, that would be about 53K if you can get one in time. That's really a dramatic change from where we were with the $100,000 starting price a year ago. And it's, I think, going to be a compelling upgrade for a lot of Model Y customers who bought in the sort of 50 to 60K range.
Cybertruck Model Y. Cybertruck Model Y. Yeah. Whoa. Okay. Big year. All right. Let's thank you guys. We'll continue again this next week. Appreciate it. Powerhouse conversation here today. Jeff Lutz, Omar. Thank you both for a credible conversation. Thanks, everybody. See you guys next week. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.